Canadians borrow privately for a number of reasons. I would also first explain that the typical alternative to private financing is traditional financing. As you may have heard me use the term traditional financing, this basically just means borrowing from a bank. Whereas private financing is borrowing from a non-bank lender like Hosper. So a borrower may look to borrow privately for a number of reasons. There's countless reasons, but I'll talk about the major ones and I'll use an example to illustrate. So probably the most common reason that borrowers do not borrow from a traditional lender is because they're unable to. Maybe their timelines are too quick and the banks take a long time, whereas we can fund in 48 to 72 hours. Or simply they were just not approved and the bank says, you know what, come back next year or try again later. We want to offer that 12-month solution in the interim that provides a runway for them to do what they need to do to come back later. And that's a win-win when they can use our loan as a runway, qualify with the bank, and then pay us out, right? They graduate to a lower cost and we get paid out. Now, I mentioned I was going to use an example. So a couple common scenarios. The most common would be debt consolidation. So a client has high levels of credit card debt, consumer debt, student loans, the list goes on. And not only are these loans or these other types of consumer debt generally a higher interest rate than what we would charge as a private loan because it's secured by equity, it also just could be the fact that we're able to consolidate and allow the borrower to focus on one monthly payment instead of a multitude of collections and calls that they're getting from all their creditors. Renovating the property is a common scenario. Maybe they do and did qualify for bank financing, but they're locked into a longer term mortgage where the penalties would be too great to break and refinance. So they're coming to us for a smaller second mortgage loan. Purchasing a property, that's a common scenario where they anticipated all the way through and maybe even their bank advisor told them, yeah, it's going to be fine. And then in the 11th hour, there was a condition that fell through and therefore the banks didn't come through on funding. And actually, we've seen this a lot recently where the bank's lending guidelines are changing. So maybe nothing changed with the borrower, but something changed with the bank. And again, they're now committed to a purchase that they need a temporary solution to close on. We also see that family debt and divorce is a common scenario. Basically, anytime someone has a life event or an urgent need for funds, if they have equity in their home, this can provide a much more cost-effective solution than borrowing from other unsecured means.